Welcome to our budget debrief. So following the Chancellor's recent budget announcements, today we're going to cover off what the changes were and essentially what they mean for you. So we've broken this down into three core areas: changes for individuals, changes for businesses, and changes for employers. If we look at the changes for individuals first, what the Chancellor did announce is that the income tax rate bands are going to be frozen, as well as the rates of income tax that you pay on those for a further 3 years. So currently they're frozen until the 28-29 tax year. We're set to see them frozen all the way up to the 2030-31 tax year. And as these rates have been frozen from 2021, by the time we get to 2031, they will have been frozen for 10 years. So what we're going to see is more and more people are being dragged into the higher rate band, which ultimately means their net take home is less, essentially. She did announce that from April 2026, there's going to be a 2% increase on dividend tax. So we're set to see the basic rate band increase to 10.75%, the higher rate band increase to 35.75%, with the additional rate band remaining at 39.35%. And then, unfortunately, there is another change coming in for landlords. So we're set to see investment income have an increased tax rate from April 2027. So that's on bank interest and property income. Your basic rate band will increase to 22%. The higher rate tax will be at 42%, and the additional rate at 47%, unfortunately.
And that additional rate will also impact on trusts.
So the other changes, we were expecting to see some reduction in the limit for ISA investments. However, the £20,000 remains. What she did announce for under 65-year-olds is that there'll be a cap on the amount you can invest in a cash ISA at £12,000. You are then able to top up to £20,000, but the additional £8,000 has to be in stocks and shares. For 65 and over, you're still able to make the £20,000 contribution into a cash ISA. For non-UK residents who pay Class 2 national insurance to contribute for their state pension whilst living abroad, that's going to be removed from 2026, and you'll no longer be able to pay at £3.50 a week. You will be able to contribute at the Class 3 level, but unfortunately that's going to be £17.45 a week based on current rates. So that's a big difference. She did announce the triple lock, so we're still going to see that state pension rise in April 26 by 4.8%. However, for the basic and new state pension, she's removing the need to pay tax by a simple assessment on that next year. We're yet to see how that's going to pan out, but there's going to be a change to that administration process, unfortunately. Then the only change for students was on the Plan 2 threshold. Those rates are set to be frozen for a further 3 years, so that's the rate at which you pay and the interest that's charged. Then from April 2028, electric and hybrid vehicles, they are going to introduce a VED charge based on mileage. So 3p a mile for fully electric and 1.5p a mile for plug-in hybrid cars. To compensate, the supplement is increasing from 40 to £50,000. So we're yet to see how that's going to be administered. Then in the press, she did talk about a mansion tax, and how they're going to introduce this is with a high value council tax charge. So come 2028, properties that are worth £2 million or more are going to be revalued, because essentially they're based on 1991 values currently. Yeah. They're going to be revalued up to today's value, and then there's going to be an extra council tax charge to pay.
And that'll just be on the band F, G and H.
For making tax digital, that is still obviously coming in for income tax individuals from 2026. However, she did announce that the penalties will not be imposed for the first 12 months of submissions. So that's a welcome addition to these new submissions that have got to be now made next year.
So an IHT recap, obviously the last budget had some quite fundamental changes to how IHT is going to be treated in the future. So from April 2026, the business property relief and agricultural property relief changes are that any assets over £1 million per person that are subject to business property or agricultural property relief will be taxed at 20%. Now, obviously, that there has been an easement in this current budget to say that the £1 million allowance is available to be transferred between spouses. Obviously, on the first death.
That wasn't going to be previously. So last year when we looked at the budget, there was planning around wills and getting things updated, and obviously that's a welcome change. That at least it can be transferred.
Yeah, obviously we would still advocate that you look at your wills, amend them as necessary, make a will if you haven't got one already. What we don't want is for you to fall within the intestacy rules and then have to navigate things like deed of variation in order to make your estates more efficient for IHT purposes. From April 27, in the previous budget, it was also announced that pensions would come into your estates from that date. Obviously, what the government has actually now announced is that pensions
The scheme administrators
will,
are going to be the ones that are liable to pay that inheritance tax. Essentially, they're going to be able to withhold up to 50% of the value of the pension to be able to pay that over instalments. And that's what all the consultation was on. So unfortunately, these changes are still coming in for inheritance tax. So April 26 is going to be a change, and April 27. So what we would say is now's the time to be looking at your inheritance tax exposure and undertaking some planning where we can look at mitigating this. So changes for businesses that were announced in the budget, corporation tax rates are remaining the same, so 19 and 25%. However, there will be higher penalties if you submit your corporation tax return late. So they are set to double from 1st of April 2026. There were no change to the VAT rates, and equally, the threshold remains at 90,000. So we were expecting some potential changes there. They've remained the same. For capital allowances, the annual investment allowance and the full expensing for limited companies remains unchanged, so that's still there. The rates are the same. However, the main rate allowance is being reduced from 18 to 14% from April 2026. So what you will notice, if you've got an asset in your business now that's currently being written down in value every year and you're getting a relief every year, that amount will reduce, unfortunately, moving forwards. They did announce a new first year allowance at 40%, and that's going to be introduced from January 2026. That's also going to apply for leasing purposes and unincorporated businesses. So your sole traders and your partnerships who don't benefit from full expensing can benefit from this first year allowance.
Yeah, and that's UK leases only.
For the manufacturing business, she announced that she was going to cut electricity prices for them. One of the key changes that we saw, and we were not expecting this, was the change in capital gains tax relief for a sale of a business to an employee ownership trust, so EOTs as they're referred to. So the day of the budget, that change happened, and it reduced the tax relief from 100% down to 50%. There's obviously still a relief there, but that's going to have a big impact on people that are selling businesses to an EOT. For the hospitality and leisure and retail sector, what she did announce was there'd be low business rates for them.
So changes for employers. Obviously, national minimum wage rates will go up again from the 1st of April. The rates for over 21-year-olds is going up by 50 pence to £12.71. For the rates for 18 to 20-year-olds is going up at 85 pence from £10 to £10.85. And for 16 to 17-year-olds is a 50 pence rise again. So hospitality industry really being hit in these changes.
Yeah, I think what we're seeing is the smaller businesses, they're being pressured to pay these higher costs and meet these higher demands when actually equally the national insurance has been frozen, so they're not going to see any uplift in the benefit there, but they're going to have to pay out more, unfortunately.
Yeah, and it's not just the minimum wage, obviously staff that is affected by this. Obviously, it goes all the way through the various staffing levels.
Yeah.
So it's a knock-on effect. Other changes, salary sacrifice. Obviously, currently employers can offer a salary sacrifice scheme to their employees for pension contributions, such that both the employee and the employer benefits from NIC exemption on those salary sacrificed amounts. That won't apply from April 2029, so we've got a little bit of time yet to obviously do some planning, get some extra pension contributions in there. But from April 2029, the NIC exemptions are no longer applicable. So we will see basically employers going back to the old style repayment relief at source. So basically they'll have tax relief via the gross pay, but the NIC will stay there.
Yeah, and obviously that's that £2,000 limit she talked about. However, it is quite a while away. It's something to think about when you're looking at packages for your employees, but we might want to maximise contributions beforehand.
Exactly. Small and medium-sized businesses, there is a little bit of light at the end of the tunnel for those taking on apprentices. The 5% investment amount that they currently pay towards the apprenticeship will no longer be applicable, so they will have that as free of charge.
Yeah.
From April 26,
employees will no longer be able to claim tax relief for working from home. So currently, employers can reimburse these costs. That will still be the case. You can still reimburse in tax and NIC free, but where you try and claim this relief via your self-assessment or in your tax code, you're going to be restricted and not be able to do that. So again, when you're looking at employee packages, that's something to consider with these working from home costs.
Yep.
So we were expecting some more changes, and obviously they didn't materialise. However, there were still some changes that we've talked through today. Hopefully, that's been easy to understand. If you do have any questions or want to discuss anything any further, please get in contact with us and we'll be more than happy to help.